Why am I talking to you? Well, I'm Natalie. If you don't know me, I'm the CEO and co-founder of MyExpatTaxes. So I'm also a US expat. I am based in Vienna, Austria, and I'm from California. And basically, I have a background in finance and information technology. And when I moved abroad, I realized how difficult it was to file your US expat taxes from abroad because pretty much any tax software available was just not catered to that market. And that's why we created MyExpatTaxes. We're the leading US expat tax software trusted by thousands of expats worldwide from every corner of the globe. And we're so happy to be in that position to help fellow expats along the way as I'm filing with you. We're all going through this journey together. So what are we going to talk about today? Generally, it's one-on-one for US expat taxes. Usually people who join these webinars are just looking for, okay, do I need to file? What do I need to file? What do I need to do? Please just summarize everything for me, which is what I will do. And then another thing that might make you a little bit happier is while filing is, of course, not fun, I don't think taxes and fun go in the same sentence. There are some things to look forward to, and we will get to that because there are refunds on the table for you. Lots of refunds, actually. And then there's also potentials to lower debt as well, which, again, I will get to towards the end because the good news comes at the end. The bad news will be what we start with. And the bad news is who needs to file, right? There's a lot of information on the screen, but essentially the main thing you need to know is if you are a US citizen or you have a US green card and you haven't formally given it up, then you are held by the same filing requirements as US citizens in the US, right? No matter where you live. And what that means is your worldwide income is pretty much subject to US taxation. Not that it will be taxed and you will end up paying taxes, but it's subject to taxation. So breaking that down, that essentially means that when you think about how much money you make, and if you pass the filing thresholds, as this is very similar to other countries, there's a filing threshold that you have to meet. This determines if you're legally required to file a US tax return. So again, when thinking about income, it's not about just US source income. So just because of some income you earned while working in the US or some, US based investments or US property, it's about your worldwide income. So any type of income you earn is subject to taxation. And you have to put that in that total gross income calculation. So a couple things to note there as well is we're talking about gross income. So this is your income before deductions, before taxes are paid, etc. So you're counting any salary you make abroad, any pension income you have from any country, US or foreign, Social Security benefits, right? Any type of income, rental, investment, self-employment, etc. If you earn money, you have to calculate that into the gross income. And so when you look at gross income, of course, there's different filing requirements per year that changes based on inflation. We are obviously towards the end of this calendar year. We're already November. I don't know where the time flies by. For those of you that miss America, you're probably thinking it's almost turkey time. At least that's what I'm thinking. But regardless, so if you're filing your 2021 tax return, which you'd be filing this calendar year in 2022, you can see the filing requirements up at the top of the screen. I won't read them all out. And if you're thinking about filing for next year, you can see the adjusted numbers below. So a couple things to majorly call out there is what gets a lot of expats is this married filing separately. You will see that amount has not changed year over year. It's still $5. It stayed $5 since 2018. And married filing separately is actually a very common filing threshold for US expats. Because essentially, if you're married to a non-US citizen, you don't want to put them on your US tax return, and you don't qualify for head of household, which means you basically have a qualifying US dependent and you pay for more than half the cost of the home, you're probably filing as married filing separately. And if that's the case, it's $5. So if you make over $5, you have to file. Another thing that people don't realize is regardless of the filing thresholds, right? Even if it's $12,000, almost $13,000, if you're self-employed and you make over $400 in net self-employment profit, right? You have to legally file a US tax return because the US has to see if you're subject to US Social Security tax. So Again, it can be a little misleading when people say, hey, the filing threshold's, $12,000, $13,000, or sometimes people even say, you can earn up to $100,000 tax-free and you don't have to file. That's not true, right? The filing thresholds are quite lower, and depending on what filing status you're in, it can be just $5 or it can be just $400 in net self-employment income. So that's really important. Another question we get a lot is it based on age, right? So of course, if you have dependents, you're thinking, do my children have to file a US tax return now? Well, it's not really based on age, it's just based on income. Of course, there is some factors that come in based on your age. So if you're a little bit older, if you're 65 plus, the thresholds are slightly increased. But normally, these are the filing thresholds. Of course, if you have dependent children that are US citizens and they have a lot of unearned income, so I would say about more than, let's say, $1,100 US, you might have to file for them as well. However, generally, these are the filing requirements. And one more thing, not to scare you or make you feel bad, but you technically had this reminder in your US passport. So that's the screenshot you see on the other side, where really, if you flip to the back of your passport, you will see in section D that it does say that you're subject to US taxation. And, look at these really long publications of hundreds and hundreds of pages to figure out what to do. So unfortunately, basically, if you live abroad and you make money and you make enough money to live, you probably need to file a US tax return. Not that you have to pay taxes, but you do probably have to file taxes. So what documents do you actually need to file, right? I mean, it really depends on what kind of income you earn. So I generally break it down into 3 buckets. If you're employed, if you're an employee in a foreign, in a foreign country, if you're just working as a salaried person, normally you're going to need your local annual payslip or tax return for your gross salary and foreign taxes paid, right? Now, another thing that a lot of US-based tax softwares and US-based firms that don't specialize in expats, what they won't realize is your company pension is also possibly taxable. And that means not just when you withdraw it, but the contributions and earnings that you have annually might be taxable. So even if it's not, and you have a type of tax treaty benefit, which we'll talk about later on, you still have to report it. So again, it's really important if you go through this journey that you know either what you're doing, if you're doing it yourself, or you go with a firm or a tax software that really does specialize in expats. Just because we see so many people come in, from you name it, TurboTax, Tax Act, any of those US-based tax softwares, and we have to amend their returns because they're just incorrect and they just don't capture the information that's needed to be captured to be compliant. Now, another thing that is difficult is if you're working in certain countries that have a different tax year. So if they're in the UK, Australia, New Zealand, Hong Kong, you have a very different tax year than the US tax year, which is January to December, the calendar year. You will need to basically translate your information to the US calendar year. Now, if you're self-employed, of course, you need documentation. You need, your local books or tax returns for your gross revenue, what expenses and what foreign taxes you've paid. And then you'll have to think about including, again, a form that's not really supported in a lot of US-based tax softwares, which is Form 8858, to essentially say that you have a foreign branch of your self-employment. That sounds very odd, but basically what it boils down to is the US, ever since tax year 2018, believes that if you're a US citizen, technically your HQ should be in the US. So if you have a foreign self-employment role and you're based with bank accounts and, an office somewhere abroad, you have a foreign branch of your self-employment role. Doesn't really make sense, but that's the way the rules were written. And if you have other income streams, you need to gather, if you have US income, you have to gather your 1099 documents. And if you have non-US income, you're going to have to understand what's your gross income and any foreign taxes paid. And of course, I just saw the question pop up. This is recorded. You'll kind of see that at the top. Everything is recorded and will be sent to you right afterwards. So no worries about that. So basically, these are the documents that you should look for, things that tell you how much money you made, how many taxes you paid, to which country did you pay those taxes to. Now, another important thing to know, I know I've already filled your head with a lot of information, but there's a lot more coming, It's FATCA. You've probably heard it and you've probably dealt with it as you continue to open up bank accounts in different countries with a US passport. It's probably not that easy. You have to sign a lot of different disclosures, put in your US Social Security number, allowing the IRS to look into your German, Australian, etc. bank account, and you're probably curious to why that is, and that's because of FATCA, which is a US federal law. It's essentially a double reporting requirement where the foreign financial institutions that allow US citizens to open up financial accounts with them have to report those assets to the US Treasury, while you, as a US taxpayer, also have to report the same accounts, so the accounts you own, to the US Treasury, possibly also to the IRS via certain forms. So if you have over 10,000 US dollars as a combined maximum of your bank accounts, right? Not just bank accounts, but really for any foreign financial accounts. So that includes brokerage accounts, pensions, etc. So as long as they're foreign and financial, if you have a combined maximum balance, and we'll get to what maximum balance means, of over $10,000 in any year, even if it was for a split second in the year, you have to file the FBAR, which is Form 114. The FBAR can be a little bit confusing because it's not actually submitted to the IRS. It's not really a part of your US tax return, although it is actually a part of it because they're very related. And that's another issue that happens with a lot of US tax softwares, that they just don't support this. And so while you file your US tax return and you think you're compliant, you might be missing out on filing this foreign bank account report, which is, very important to file because there are penalties attached to it. Now, another form is if basically your max balances then exceed the next threshold, which is 200,000 US dollars on the last day of the tax year, or 300,000 during any time during the year. These amounts are doubled if you're married filing jointly. You do have to file Form 8938. This form is actually included in your US tax return and goes to the IRS. The other one goes to the US Treasury. A little confusing. They basically say the same information. It's just the second level of the form. So 8938 is like an extended version of the FBAR. So max balance is probably the most confusing part in there because you're thinking beginning, ending, average balance. No, it's really your maximum balance. So when you're thinking about the maximum balances in your bank accounts, what you have to do is think about, okay, first, what kind of foreign financial accounts do I have? Are they based in the US? Are they based abroad? Anything in the US, you ignore, right? This is only for your foreign accounts. I know there's a gray area with these online accounts. I normally say, hey, if you have like an online bank account, where's the headquarters of, where that company is, right? So for example, if you have a Wise one, is it headquartered in the UK? If you have PayPal, is it headquartered abroad or in the US? So a little bit of a gray area. It's hard to say, but I always try to say, let's be conservative because, as I will talk about soon, there are penalties attached, and better safe than sorry. So the next thing to do is, once you know what your foreign financial accounts are, you have to think about what's the maximum balance. It's pretty difficult to get the maximum balance. Some banks do provide it, very limited that we've seen. Otherwise, what you will normally end up using is like a monthly statement. So you look at your monthly statements and try to figure out, out of the 12 months, which month had the biggest balance. That's kind of a pretty safe estimate. The safest estimate is, of course, if you pull all of your transactions and you kind of create a running balance. But I say that's a little bit more for the Excel savvy. So if you're not Excel savvy and that just sounds like an impossible task, monthly statements are okay. Of course, you can always estimate higher than lower. Just knowing that the US Treasury gets the same information and you're just double reporting on it. Then every bank account, every foreign financial account, so pension, etc., you'd figure out what's the maximum balance in that account, and then you add them all together. So even if you have money in one account and then you transfer that money to a different account, what will happen is that the maximum balance, even though it's the same funds being transferred between accounts, the maximum balance is counted twice, right? For bank account 1 and bank account 2. So you would add up all the maximum balances. You have to obviously convert to USD based on the Treasury exchange rate for the end of the year. And if it's over 10,000 US dollars, you have to file the FBAR. A lot of information. Again, this is recorded for your reference, so but it is something to think about that you have to do annually. Now, as I mentioned, it's really important to file your FBAR and your US tax returns, because on the other side of things, while you can get refunds, which the good news I say for the end, this is the really bad news, is some forms actually have very high penalties or tax attached to them. So the majority of people do not have to file kind of the bulk of these forms. However, we do see expats that come in that end up having to file them, and they're in for a not great surprise. Mostly it's okay. We figure out a way to kind of get around the penalties. However, it is stressful. I won't lie, it's a stressful process. So the first one is 3520 and it's partner 3520A. And essentially that's for foreign trust and gifts. So foreign trust reporting mainly comes from having a private pension. So you have like a pension account, a private retirement account that's not linked to, your employer. That might be a situation where you may have to have this form. Again, there's a lot of exceptions to filing this form. So MyExpatTaxes, we actually lead you through all the exceptions to figure out if you need the form or not per pension account. And you'll see that directly once you go into the MyExpatTaxes, app and you fill out your profile. We actually ask you per pension, right, if you qualify or not for the exception. However, mainly it comes down to if you have a pension account that has no restrictions on how much you can contribute or no restrictions on what you can withdraw. What that means is you can basically contribute as much money as you want. It's not based on your income, and you can withdraw at any time, and it's not based on your age or disability or educational benefits or etc. Right? Another one is foreign gift reporting. So if you get over 10,000 US dollars as a gift or inheritance from a non-US citizen, you also have to file this form. The late filing penalty is $10,000 per form. The IRS definitely does enforce it. I think that's probably the late penalty that they enforce the most. It is absolutely terrifying when someone gets a notice with this bill. We have seen it. However, like I said, there are ways to, basically ask for forgiveness, which they do forgive 99% of the time. It's just a long, drawn out process. And there are ways to even prevent it in the first place, which is, via streamlining, which we'll get to. And basically the next set of forms, if you have a foreign corporate. So if you have created a limited liability company where you have a foreign partnership, you might need these forms. Again, in MyExpatTaxes, we try to vet through if you need this form or not. And then there's also opportunities to talk to a tax professional to figure out what forms are needed. This form also has the same late filing penalty, $10,000. So they're serious about these. Like I said, FBAR and 8938, the ones we just talked about, they also have the late filing penalty, $10,000. I rarely ever see those enforced. So if you're really worried about your FBAR, I can say I really have not ever seen it enforced. Not that they're not going to be enforced, not that I've seen every single notice that's ever gone out from the IRS, but normally those are a little bit, more forgiving. 8621 is the passive foreign investment company. This basically, it means if you have, foreign pooled investments, so you are investing in mutual funds in your local country, you normally trigger this. Again, MyExpatTaxes will walk you through if you need this form or not, based on how much you own, if you make income. There is no late filing penalty on the form itself, which is amazing. However, if you do earn income from these funds, you will probably end up paying tax. So it's just something to note that this is one of the more common reasons that expats actually end up owing tax, because the majority of expats don't owe tax. However, this will normally trigger tax. So that's the very ugly side of US tax returns, is the penalties, the potential tax you may incur. This is the good part of it, is if you are in a situation where you haven't been filing, or you just heard, I probably need to file some of those forms that she just mentioned, but I haven't done it. What do I do now? Am I on the hook for this giant tax bill? Not necessarily. So there's a streamlining foreign offshore procedure. We call it SFOP for short, because that's a pretty long name. It's an amnesty program. It's an amnesty program that's offered to US taxpayers to become tax compliant without late filing penalties. So all those penalties you just saw, if you are going under the streamlined procedure, you will not be hit with those penalties, right? They will waive all of those penalties. Obviously, if you owe tax on a tax return, then tax and accrued interest will still apply, but there are no late filing penalties. So that is the most important thing there, and why this program is so commonly used. And I would say probably anywhere between 30 to 40% of our, clients on MyExpatTaxes use the Streamline Foreign Offshore Procedure. We're the only tax software that allows you to file that way. You can pretty much do it all in one day, depending on your situation. So what you need to do to be eligible in order to basically apply for the Streamline Foreign Offshore Procedure, I'll just call it streamlining for now because that's pretty much a mouthful, is you do have to have kind of this non-residency requirement, which means for one of the 3 back years, because when you file Streamline, you have to file 3 back years of taxes. So one of those 3 back years, you needed to not have a US home, basically. That's what abode means, is a home or like a domicile. But basically, you need to not have a US home. And then you have to be physically outside the US for 330 full days. This is normally not a problem for most expats. Obviously, if you have a lot of family back home, if you travel back to the US a lot, even though you're based abroad, it can be a problem. I will say we have definitely filed streamlining for those that don't meet this requirement. We just have to do it in a more special way. So don't freak out if you don't meet requirements. If there's a will, there's a way. Now, going with the will, the next part is you have to be non-willful. So basically, you didn't file or you didn't file properly because you didn't know. You weren't aware of your filing requirements. You were not trying to evade tax. Now, obviously, there are people that know about their filing requirements. They have filed and then they stop filing. If it's normally good due to a good reason, so say, someone got sick, some life event happened that really made it impossible, you weren't able to afford tax filings, this is something you can personalize on your application, so to say, to the IRS with streamlining. And we have definitely done those as well, and they have been accepted. So again, while this is the criteria to be eligible, there's always exceptions and there's always ways to kind of explain your situation. The IRS is mostly forgiving if you're trying to be compliant. Now, if you're going through the streamlining procedure, what you will need is you'll need to file either original or amended, which is basically a corrected version of your filings, right? Corrected is mainly for those people that are missing those high tax penalty forms I just talked about. So they need to amend their returns to include them. Basically for 3 back years, so of federal returns, starting June 15th, because June 15th is the deadline for your current year taxes as an expat, assuming you don't file an extension, there's kind of options you can do. So you can always file, which is how we normally recommend, as the current year really as the current year. So what that means in numbers is you could file 2018 to 2020 with 2021's tax return as your current year. And we'll get into why we kind of recommend this version instead. Or you can always opt, depending on your situation, maybe there's something in 2018 you don't necessarily want to dig up. You can always go and file 2019 to 2021 with 2021 filed as a back year. So that's also an option. So again, towards the end of the year, you have the ability to kind of determine which years get included inside of this package. And then you have to file 6 back years of those foreign bank account reports. So the next part is obviously how can we help you with streamlining, right? Because it is a scary process. It's an expensive process as well. And it's a very time-consuming process. And we can only hope that with MyExpatTaxes software, we have made it as quick as possible, which I would say it's pretty amazing that a lot of our clients are able to become tax compliant with streamlining within a day, right? This is usually a 3-6 month process. However, if you have your information on hand, we will get you streamlined and tax compliant as soon as possible. So the thing is you would file your 3 back years. Most expats end up not owing any back taxes. That's the amazing part. They actually get lots of refunds, and I'll tell you why they get refunds. So just for example, I definitely see a lot of people that file Streamline this year, and they have a lot of US dependent children. It's wild to see that they're getting, upwards of $10,000 as a tax refund for a tax return they didn't even know they had to file. I'm not even exaggerating. Obviously, these are for those that with, for dependents, but it's still crazy to see. Now, the main reason we basically say to keep your current year as your current year, so 2021 as a current year return, rather than making it a back year return, is because when you file through Streamline, you cannot e-file it. You must paper mail it. That it's in the instructions on the website. You have to paper mail it. You cannot electronically file it. And the thing is, the IRS is so overwhelmed, you can't even reach them on the phone, let alone, expect them to process paper mail quickly ever since the pandemic. Not that they did it that fast before the pandemic. However, if you are streamlining and all your returns are streamlined, you won't hear anything about a refund or anything about your returns for, upwards of a year or more. So we always mention that, hey, if you file and you see that you get a return on your 2021 tax return, or you want to make sure you're in the system and you want to prove that you are tax compliant because maybe your foreign bank requested it or a foreign employer requested it, e-file your 2021 tax return. That is the quickest way to get in the IRS system. That's the quickest way to get any refund. So just be aware, most US-based tax softwares don't let Americans abroad e-file for one reason or another. It can be because you're married to someone without an ITIN. It can be because you need a specific expat tax form included, etc. It's just really tough because you pay for it and you go through, and then you can't even e-file your current year, and it's not even an option at all. We do let most expats e-file like 99% unless there's some very special reason not to do so. We offer the streamlining package, probably the most affordable package out there. It's just because we know it's a complex procedure and we just want to make it as easy as possible. So that is streamlining. And I will quickly kind of go through this because I'm sure this is just a lot of information, but this is again going to be recorded. This is a good, snapshot to just save as reference, right? Is when you file your US tax return, you're going to see a package of like 20, 50, 100 pages, depending on how much income you have. What's even included? So 1040 is the overview form. That's going to be the form that includes how much income you make, what deductions you take, what tax you owe, what's your refund. It has a couple additional schedules. They're all the same, right? It's essentially, they're all connected to 1040. It's all just this big overview of, again, what's your income, what's your deductions, what credits, what tax, what's your refund. If you are claiming the additional child tax credit or the refundable child tax credit, as it's now called, which I will talk about shortly, you will see Schedule 8812. If you are claiming the foreign earned income exclusion, which is probably the most common expat tax benefit, again, I will talk about it more in detail shortly, you'll see Form 2555. If you're claiming the foreign tax credit approach, you'll see 1116. If you're claiming a tax treaty benefit, you'll see 8833. And again, to disclose your foreign bank accounts and your financial accounts, you'll see the FBAR and Form 8938 if it's applicable to your situation. So these are kind of the main forms to look out for. There's going to be a lot of other information, right? So, for example, if you're self-employed, you'll see a Schedule C. If you have rental income, you'll see a Schedule E. If, there's depreciation schedules, things like that. However, these are the main forms to focus on. This is really what tells the story of really what are you filing to the IRS about your income. So what are the expat tax benefits? I keep saying you have to file, but you probably don't have to pay taxes. And that's because of these 3 different tax benefits. So, if it wasn't complex enough, there's 3 different options to choose for to try to lower your US tax liability. There's the foreign earned income exclusion. That's Form 2555, as I mentioned, and it excludes about 100K of foreign earned income from US taxation. The threshold is actually a lot more. It increases every single year. So we just say about 100K. Next year, it's going to be very close to 110K. And it's normally a pretty easy form to use if you have a very straightforward situation. Now, things to note is it's only for foreign earned income, which means the income must be foreign, meaning you must have worked abroad for it. It cannot be income that you were on a business trip in the US for. That's US income now. It's no longer foreign. And it must be earned. So it must be salary or self-employment or partnership income. It can't be pension or Social Security or something that's seen as unearned income. So again, if you're living abroad for more than a year, it's pretty straightforward. If you're living abroad for under a year, it's a little harder because there's different tests that you have to take to qualify for it. And then you can't use the easy test of bona fide residence. You have to use a little bit of the harder test of the physical presence test and then figure out, okay, what's your date range to use? Like I said, it just involves a little bit more thinking at that point. It's great for countries with low income tax, right? So if you're not paying that much income tax where you live, this is an amazing form to use. There's obviously some cons because it's a little bit easier is you can't claim, the additional child tax credit, which we'll get into. It can limit, your contributions to your US IRA if you still contribute to those retirement accounts in the US. And once you use it, you kind of have to stick to using it. Otherwise you revoke it. And it's a little bit annoying to revoke it because then you can't use it for 5 years. So you're kind of in this uncertainty of what if I need it and then I can't use it. Now, the foreign tax credit approach is an approach to which it uses your income taxes paid abroad. So any income taxes you pay in your current country, you can use to offset US taxes owed. It is fairly difficult because there's a lot of math involved. On top of that, there's different buckets of 1116 kind of foreign tax credit sources. So you have general, passive, resource. I'm just naming things at this point. What it really means is you have to break up your income taxes paid per income source and figure out how much you can claim on each bucket of income. And there's a lot of different buckets. So it is very confusing to do that. I mean, if you just have salary, it's pretty simple. It usually goes to general, but if you have self-employment, that would go to foreign branch. If you have, US pension, it might go to the resource by tax treaty bucket. If you have investment income, that probably would go to the passive bucket. So it's a little bit more challenging to kind of get a hold of. The pros of it is that you can claim the additional child tax credit. You have taxable compensation. So you're probably eligible to contribute to your US IRA. And again, I just said it's pretty complex because on top of all the different buckets and the calculations, you have to then create an alternative minimum tax version, AMT, and it's a lot, right? It's not ideal for low tax countries because if you're not paying that much tax where you live, then there's not that much credit to claim. It's simple as that. So there's also the tax treaty, which the US has tax treaties with over 60 countries. And basically it will reduce or even exempt a certain income from US taxation. It's fairly difficult, I say, because you have to really understand the tax treaty. And while every tax treaty might seem quite simple to just read, it's not, because in every tax treaty, there's something called a savings clause. And a savings clause basically says, as a US citizen, 99% of this tax treaty does not apply to you, except for paragraph 1 of Article 2, paragraph 3, B of Article 5. So even if you're reading it at face value, you can't take it at face value. You have to really understand, okay, what can I actually use as a US citizen because of the savings clause? Yeah, I think just at that point, once you're reading a treaty and having to decipher the meaning, you can understand why it's difficult. Now you're probably thinking, how am I supposed to do this? Well, that's what MyExpatTaxes is made for, right? That's what we realized was the big problem. And so what we will do is you just enter your income as is, right, in your local currency. We convert it all to USD, and then we think, okay, what does your tax return look like using the foreign earned income exclusion? What does your tax return look like using the foreign tax credit approach? Which one gives you the better refund or the better, the lower amount of taxes owed? And we pick that. Then we also obviously think, okay, what income is applicable to use via tax treaty and be exempted? And if there is, we'll automatically put the tax treaty clauses in there, because it is important to claim tax treaties on Form 8833, because if you don't file that form, there is possibly a $1,000 penalty for not filing and disclosing that you took a tax treaty benefit. Again, the not so fun side of taxes. However, we do our best to pretty much put everything you need in the return for you, so you don't have to think about it. And all you see is an overview of, okay, this is what my tax return would look like under this method. This is what it would look like under this method. And this is why we chose the method for you. And whether you're in our do-it-yourself tier, so the most basic standard tier, or if you're in our premium tier where you're working with tax professionals directly through MyExpatTaxes, you'll always get this same tax engine, right, of modeling what your return looks like under each approach. So Filing deadlines. I talked about, who needs to file, what are the benefits. Now, when do you actually have to file? These deadlines are obviously for 2022, just because we're still in this tax season. Main thing to just know is by April, you need to file or at least understand how much you pay, because that's the deadline for payments. It's the same as if you were in the US. However, if you don't expect to owe taxes, right? You never owe taxes. You don't really have any US source income. There's no reason to owe taxes. Then you can wait till June 15th. That's the expat deadline for filing. You have an automatic extension. So you can just cruise and wait until June 15th. Probably don't wait exactly until then. However, you do not need to file by April 18th or April 15th. This year was the 18th, but it's usually April 15th. You don't have to file by April 15th, but if you owe taxes, you should pay by April 15th, because interest continues to accrue once you miss that deadline. You can file by June 15th an extension to October 15th, right? This year it's October 17th. However, it can be normally October 15th. It always just depends if the 15th falls on a holiday or a weekend or something like that. So that's a deadline we just passed, the October one. By the October deadline, if you need more time, you can actually file an extension with a formal letter request. This is a little bit harder. The other ones are like very easy, right? One's automatic. The June one is automatic. The October one, you just have to electronically file this form, which you can do on MyExpatTaxes completely free. You don't have to pay yet to file this form, right? You just obviously need to create an account. So we have your social security number and we can file it on your behalf. Those are easy. The December 15th is not that easy, because you have to create a letter, you have to sign it, and you have to send it via snail mail to the IRS to request this extension. The next deadline we are coming about is actually not December, but it's November 26th. I haven't updated here, but it's November 26th. They just announced it, is when e-filing shuts down. So if you're looking to e-file your tax return, your 2021 tax return as a current year return, do it soon. Once the 26th rolls around by midnight Eastern time, e-filing is shut down till February. And so you will not be able to e-file anything. And obviously, if you haven't filed, you should do it ASAP, because the longer you wait, if you do have taxes, then penalties and interests are accruing every single day. The good news, I'm sure I have just terrified you for the past 39 minutes. The good news, why I say it's actually can be fun to file, because who doesn't like money at the end, is there's a lot of refunds on the table. For 2020 and 2021's tax year, you have the stimulus payments. You probably have heard about the stimulus payments. They're also called the economic impact payments. They're also called the recovery rebate credit. All the same, they are essentially the financial aid amounts that the US government has been giving out due to the pandemic. So round one and round two is going to be on your 2020 tax return. That's $1,200 per taxpayer, $500 per qualifying dependent. Qualifying dependent basically means US citizen, has a US social security number, and they are of age. So they are under normally the age of 17. The second round is $600 per taxpayer, $600 per qualifying dependent. The third round is $1,000, $1,400 per taxpayer, $1,400 per dependent. You'll notice I don't have qualifying in there, because it's any dependent. It doesn't have to be under the age of, 17 doesn't have to be your child, right? It's any dependent, US dependent, that you can claim on your tax return with a social security number. So you do need, like I mentioned, a social security number to be eligible. You can't be claimed as someone else's dependent, because that would mean that they got your money. So you can't reclaim that, because that's double claiming. There are income thresholds. So basically, if you are, if you're a single filer, you're making over 75,000 US dollars, you might get capped on how much you get as a refund. There are ways around this, and we'll kind of get into it with the foreign earned income exclusion. However, basically, if you're a high earner, you might not get the refund. So how do you claim the refunds? You would either file or amend a 2020 return for round one and round two. You would file a 2021 return for round three. And like I said, you should e-file if you can. If you don't e-file 2021, you're not going to see these refunds for a year and a half, maybe even 2 years. If you e-file before November 26th, please, because that is when the deadline is to shut off, and there's nothing we can do about that. Once the IRS says there's no more e-filing, there's no more e-filing until the next year. The child tax credit refunds is also a huge one. So the stimulus payments were one time in 2020, one time in 2021. Child tax credit refunds is annually. So basically, it's $1,400 per qualifying dependent. Again, qualifying. So US dependent, US Social Security number, must be a child, must be a dependent on your tax return under the age of 17. In 2021, depending on how much time you've spent in the US, it's anywhere between 1,400, which is what the majority of expats will get, up to $3,600 per qualifying dependent under 18. So that just changed slightly for 2021. For 2022, the instructions are still in draft mode, which means it's just not final yet. But it seems like for 2022, it will be $1,500 per qualifying dependent. However, again, stay tuned, right? Subscribe to our newsletter, have an account on MyExpatTaxes, even if you don't file with us, just so you kind of stay up to date with the information. To be eligible, you do need to have at least $2,500 or at least more than that of earned income. So earned income is salary, self-employment income that's not exempt from US Social Security taxes via the totalization treaty. I'm sure that means nothing to you, but you'll figure out what that means when you go through MyExpatTaxes. You cannot claim the foreign earned income exclusion. So if you're thinking, hey, I have US children, I've been filing them as dependents, I've never heard of this, you probably have Form 2555 in your return, and that's just completely disqualified you for it, probably for no reason. And obviously, your child needs to have a US Social Security number by the due date of your return. So you can file under Streamline. That's when I say people that get, upwards of $10,000 as a refund. They have a lot of children, they're getting the stimulus payments, they're getting the refundable child tax credit. So they're just seeing thousands and thousands of dollars in refunds, and they're totally eligible for it. If you basically say, hey, this is not fair, I've been filing, whoever filed my taxes put Form 2555 in there, and I think I don't need it. I mean, you can always amend your tax return, right? You can always amend it, right? At this point, you can still amend 2019, 2020, and 2021 to get the refund. And what you can always do is try to file through MyExpatTaxes. Will automatically tell you if you should, kind of switch to get the refund. And then from there, that can gauge if you should amend prior year tax returns. That's kind of the big refund that, if you have a family abroad, that you can look forward to. The other one is not necessarily from the IRS. It's pretty new. You'll probably hear about it in the US news a lot because it's under a lot of controversy at the moment, but it's the student loan forgiveness. So if you have a US student loan from studying in the US, it has to be basically a loan held by the Department of Education, so not a private loan. You could get basically $10,000 up to $20,000 of forgiveness on these loans. So it depends on your income, right? Your income in tax year 2020 or tax year 2021 has to be less than $125,000 US. If you're married filing jointly, that's doubled. And basically, if your income, not that they have defined what income means, I'm still waiting for it, but I would assume adjusted gross income. Regardless, if your income is lower than that amount, you can apply. Applications are already open to get the student loan forgiveness. And, that's amazing for a lot of people. The only thing to note is it's not a relief provided from the IRS. You're not going to see anything on your tax return. It's directly from the Department of Education. We don't know exactly how it's going to be taxable, this relief. The IRS already said they won't tax it at a federal level. States haven't confirmed, but most expats don't file state returns, so nothing really to worry about. Like I mentioned, applications are opened already. You can just Google it, right? Student loan forgiveness application. Make sure you go to, a .gov site. But the applications are open. The only issue is there's currently a pending lawsuit. And so repayments are blocked. America, right? That's why you should all vote. I mean, voting is about to end. So, this is why we vote, because so our voices can get heard. Because when you just look at American politics, it's kind of ridiculous where one party goes, okay, everyone's able to get the student loan forgiveness. And then the next party goes, I'm going to block it. And then they just kind of fight head to head so that all of us taxpayers are just left in the dark about what we're eligible for or what we're not. So rant is done there. Make sure to vote. Whatever party you decide, make sure to vote so your voice is heard. Now, what I mentioned a little bit earlier, and then I kind of will stop there so we can go to questions, is what it means to have too much income, right? If you're a high earner, I mean, obviously a great problem to have, kudos to you. But if you're a high earner, you might be thinking, I'm not going to benefit from the stimulus payments. I'm not going to benefit from the student loan forgiveness. Not necessarily true. This is the one case where the foreign earned income exclusion can be really good and give you a better refund than using the foreign tax credit, right? Because you have to balance it. Is foreign tax credit if you want the refundable child tax credits, or this if you need the stimulus payments, or some student loan forgiveness, is basically using the foreign earned income exclusion, Form 2555. Like I said, you can exclude up to upwards of 100 and close to 10K of your foreign source earned income. So if you're earning 200K, you use this, then you would be, okay, it's not a great example. Let's say if you're earning 150K and you use this and you exclude, 100K of your income, then you'll be reporting only a $50,000 adjusted gross income. So your income is technically low enough for the stimulus payments and for the student loan forgiveness. If you weren't using this, your adjusted gross income would be $200,000 or $150,000, so you would not be eligible for it. So again, that's kind of the cool thing about expat taxes. Maybe cooler for me because there's a lot of thinking and optimization and modeling and kind of how to handle our tax engine algorithms, but there's actually so much optimization you can do on your US tax return. It's not just reporting your income. There are ways to actually optimize your situation to get certain refunds, or if you're looking to contribute to US retirement accounts like the IRA, which can be amazing, like the Roth IRA, that's tax-free growth in an individual retirement account, maybe not tax-free in your local country, but tax-free in the US. There are ways to file a US tax return to enable you to hit these financial goals. So again, something to just keep in the back of your head of there are different options out there. And if you end up going to a different firm or different preparer, if you feel that they're not doing it in the best way they could, you should voice your opinion because there are different ways to do this. Obviously, if you are looking for a tax solution, we are here for you. Whether you're simple or you're complex, you can file super quickly. You can do it in a do-it-yourself mode at 149 euros. You can, opt to go in our premium tier. And the first thing you do is schedule a call with a tax professional and really talk through your situation. You can file for 1 year, you can file for Streamline. And you know that when you use our tax software, because obviously there's less error when there's a computer algorithm in place and an individual person trying to balance all these different benefits, is you'll not miss out on a refund or a tax treaty benefit. And we obviously include the FBAR and FATCA forms automatically because no other US tax software does that, which is ridiculous since it's a huge part of your US tax return. And we are the only one that can e-file pretty much all expat tax returns. Very small percentage we can't e-file, and that's for very specific reasons. If you have more questions that we don't get to in this webinar, or if you're watching on YouTube or any other place and you just want, honestly, a community of other people that are in your same boat, go ahead and join our Facebook group. Super friendly people, all in the same boat of, just kind of confused about US expat taxes or trying to figure out what's the best way to file. We answer these questions. So as you post, we have team members that are going through all of the posts. And if there's a question that's a question that hasn't been answered from the community and it really needs some tax professional advice to weigh in on it, we are notified of those questions and we will answer them. And then those answers will be posted in the group. So, we are there to help you. It's a little bit less direct. However, we are there to help you. And obviously it's free to join this Facebook group. Questions. I will go ahead and jump into the questions tab. Please add questions if you have them. I know we're a smaller group today because obviously we're towards the end of the year filing. But let's get to it. So the first question is, how do you revoke the foreign earned income exclusion? So when you use the foreign earned income exclusion, you're adding Form 2555 into your tax return. You can easily revoke it by not using 2555 in the next year. And what that means is you do not use Form 2555, and then you add a statement to your tax return that says that you are revoking your claim to the foreign earned income exclusion. So that's two parts. You do not use it, 2555, and you add the statement saying that you're revoking it. So this basically tells the IRS when your revoking date is so that they can calculate the 5 years that you cannot then use 2555. If you have used it in prior tax returns, you can still amend. So if you used it in 2019 and you say, hey, I want to revoke it starting 2019, you can definitely do that. You would just amend your 2019 tax return. You wouldn't use Form 2555. You would add the revoking statement saying, I last used it in 2018. I'm going to revoke it for tax year 2019. And then your 2020 tax return then is also amended to not include it, and so on and so on. So we do offer this service via MyExpatTaxes. The next question is, I have a UK pension and I never reported my foreign pension contributions. Should or can I report my prior year contributions? So UK is one of the 5 special countries, I like to say, where you can benefit from the tax treaty. So there is actually a clause in there saying if you have basically a UK employer pension, so a qualified pension, what you can do is you can defer the taxation of all employer contributions and earnings in that pension. And so that is a great possibility, meaning that you do not have to report your contributions on your annual tax return. However, you should have, if you did not include your contributions, which it seems like you did not, what you would have needed to do was then include Form 8833 in there to claim that tax treaty benefit. Because as I mentioned, you'll see at the top of Form 8833, which is the tax treaty form, it says that if you do not use this form to disclose a tax treaty benefit you take, there may be a $1,000 penalty imposed. I've never seen this penalty imposed. Not saying that I've seen every IRS notice out there. However, obviously it's written on the form. So if you're going to amend your tax returns anyways to revoke foreign earned income exclusion, I would definitely recommend to also make sure you include 8833 in there, because it's just a form that's purely informational that just says, hey, I'm claiming this tax treaty benefit. And then you don't have to pay, you don't have to claim your pension contributions or earnings. Just remember, you do have to have this form every single year. And then what is the limit of contributing to a pension? I read 2 different figures, 20,500 or 61,000. What happens if I contribute more than that to my UK pension? So actually, when you're contributing to your foreign pensions, there's not really a limit, right? When you're thinking about limits to pension contributions, you're probably thinking about the US contributions, right? So what are limits that you can do to contributing to an IRA or 401k or etc. What the other contribution limits you might be referring to is when your UK pension is not subject to 3520 foreign trust reporting. So as I mentioned, there's this really great revenue procedure. It's called Revenue Procedure 2017. I'm sure if you read it, you'll be kind of bored. However, it's amazing because it allows, I would say, 90% of pensions to not have to be reported on 3520. And what it says in there is that basically, if you have an employer pension, it does have to have the contributions. Basically, I believe it's limited to $50,000 a year or $1 million over the lifetime of the pension contributions. Don't completely quote me there. It's in our software. This is just at the top of my head. However, that is the contribution limits to be looking at to make sure you don't have to file Form 3520. So that is one contribution that would apply to foreign pensions. If you're looking at actual contributions to pensions, it's more on like the US pension, or if you're trying to claim some type of, treaty benefit. Like, for example, if you're trying to contribute to a UK pension, but also contribute to an IRA, but otherwise there's not really any restrictions on contributing to your foreign pensions. It's just obviously if you contribute a lot, you might have to file additional forms, mostly disclosure forms. So those are the questions we have. Like I said, it's a smaller group today since we're coming towards the end of the year. I mean, happy holiday season coming up. I hope I didn't ruin your holidays because of all of this information on US taxes. However, thank you for your time. And at the end of the day, it is stressful. It can be very difficult. However, we try our best to make it not. Obviously, there's not much we can do because it's taxes, but you'd be surprised. We're always there for you. We have our Facebook group, we have our webinars. You can always email us at team@myexpattaxes.com. Just try out the app, go through it, and see that it can be a very easy, streamlined way to file Streamline. So with that, I end here, and I wish you all a great rest of the day, and thank you for your time and watching.